Hi there, welcome to Nepi Invests. Today I'll be talking about Tesseract. Sounds like maybe a planet or some sort of star system in the Star Wars universe, but it's not. It's actually a cybersecurity company on the ASX. They did IPO about 4 years ago, I think definitely in 2016. Didn't do much for the first 3 or 4 years of their life, but they've been going on an acquisition binge over the last year, just buying up cybersecurity companies, and it's really probably a good sort of sector to get into, that buying binge. Because it is, we're seeing a lot of money the government's been putting to that area. But with that buying acquisition binge, we've seen a rapid increase in the share price, rapid increase in shares on issue, rapid increase in market cap, rapid increase in a lot of things. So I think the main thing going forward is if management, who have been, I won't say obsessed with revenue growth, but the one thing they are focusing on is increasing those revenues. But the main thing I want to see is whether they convert that increasing revenues into increasing margins and then thus increasing cash flow, because cash flow is king, and that's how they're really going to increase shareholder value moving forward. So let's get into the Appendix 4C for October 2020 for the company Tesseract. So a market cap of 285 million. With these acquisition binge they've been going through, it means shares on issue have really expanded over those past year or so, because in acquisitions they do capital raisings or they just issue shares to the previous owners. So we've seen shares on issue increase and share price has also increased. So if you get share price and shares on issue increasing, we're going to see the market cap really explode. That's definitely it's done that. I think it's when I first started following this company, I think the market cap was about 20 million. Now it's 285 million. Naturally, with this acquisition binge of companies that already have receipts, we're going to see naturally cash receipts increasing. So this quarter, cash receipts from customers 14.9 million. But the big thing here is what we see right at the bottom there. They were cash flow positive in operations to the tune of 138,000. May seem a little, it's not a lot, but it is a positive, and it's the main thing I took away from this cash flow report. The main thing I like to see with history is an increasing trend through time. So the first few years, we didn't see that at all. So we're seeing no organic growth. The main problem I have with this acquisition sort of play that Tesseract is going through right now is hard to see where the organic growth is behind their original business. There may be none, and all their receipts growth may be coming through their acquired businesses. That's definitely possible, but we can see definite growth in the past year in cash receipts, and that's based off the acquired businesses they have done in the past year or so. And just some reports in their details. So I mentioned before, they're really focusing on revenue. So at the moment, $100 million run rate or greater than $100 million run rate, and expected that to increase to $150 million by the end of financial year 21. It's okay to focus on revenue for a while, but I've seen management teams in the past just be sort of singular focused on revenue at the expense of other stuff, more important stuff in my opinion, such as cash flow. So it's okay to focus on revenue, particularly if that is going to lead to increasing cash flows in the future. But as I've said in the past, I've seen management teams ignore the cash flow to the detriment of shareholders. They do have $13.8 million in cash. It should be $1 million after the 8 there. And that's I mentioned they are acquisition binge, and these are the acquisitions they've done in the past 3 or 4 months. So, and it just shows you what all these acquisitions, what sort of revenue they are doing, EBITDA. So $62 million of revenue and EBITDA of $9 million with these acquisitions. And that's the main reason why we're really going to see those revenues increase over the next year or so. And I think the main thing they're going to be looking for is some sort of synergies between the businesses they've already have and these new acquisitions. If you get those synergies, sort of a buzzword there that I don't really like buzzwords, but synergies here is, I think it's sort of when you get these businesses working together and they can become more efficient when they're working together, and that increases margins, increases EBITDA, increases cash flow, increases everything. So I think that synergy side is something the management will be really looking forward to. So I've mentioned before, yeah, shares in issue have really increased, but the other thing that's really increased in the last few months has been the share price. So it's go back to June, July, share price was between 5 and 10 cents. So a low of about 5 cents in June, and now it's gone up to 35 to 40 cents. So one of the main reasons behind that increasing share price has been the government focus, the federal government focus on cybersecurity. So let's thank those hackers who have hacked into some of our institutions. And that means these acquisitions, well, the government's going to be spending a lot of money in cybersecurity. So I think Tesseract will be a major beneficiary of the increasing spending in cybersecurity. So really, you can't really fault this chart at all. We did see big two down days at the start of November. More than likely, that's around the Appendix 4C issue time. So the market didn't like it all that much, but it's rebounded quite nicely. It is a company that I'm following and potentially will buy in the future. And really, at 30 cents would have been a perfect time to buy here because that was actually a price of support. If you go back to follow my mouse here, we did see the share price reach 30 cents twice in August and bounced off it. And then it zoomed past 30 cents here in middle of October on good volume too. And that's actually quite bullish when the share price can zoom past a resistance line on high volume. That is a breakout. And then sometimes we see the share price test that new support. So resistance in this case became support, and it definitely did that. And 30 cents right here would be a good time to buy. So that's all I've got on Tesseract. Leave some comments if you're a shareholder and quite bullish on this company, or if you have any questions in relation to this company. So they're in the right sector, you can definitely say that. And even though I am hesitant about these roll-up models who just do acquisitions after acquisitions, it can, I think research has shown that acquisition-hungry companies tend to be more value destroying for shareholders than value producing for shareholders or creation for shareholders. But that tends to be higher value companies, tends to be more large cap companies. When you get into the smaller cap companies like Tesseract, there's more vagueness around whether the acquisitions are good for shareholder creation or bad for shareholder creation. So yeah, so a good company here, I don't mind it, and the fact that they are now cash flow positive in operations is a very big positive, and hopefully they can build on that in the next few quarters. So I'm not a professional advisor, so if you do need professional advice, make sure you seek out a qualified professional. That's all for this video. Have a good day. Talk to you later. Bye.